So today I'm going to go over how to sell a put option and how to roll an existing put option. And then we'll do a quick update on MSTY, MSTR, and Bitcoin. Hello my friends, this is Legend. So today we're going to do a little something different. I'm going to step through how I sell an option and how I would roll an existing option that I do currently own. Now this is after hours, so the actual options will not go through, but you'll see how to actually do it. And I'll be using the Webull platform to make those trades. And then we will also do a quick update on MSTY, MSTR, and Bitcoin to see where it's currently setting on that resistance line. So let's just go ahead and jump right on into the Webull chart and let's check it out. Alright, so here we are on the Webull chart and I have MSTY currently pulled up. Now I actually use Webull to do all of my trades, and in order to show stepping through how to sell an option, I actually have to turn on the trading platform section, right? So this will show actually what I have open for MSTY. As you can see, there's that covered call that I have, and that's that $25 covered call, and I hover over it and you can see. So there's that one covered call that I have for September 19th, and that's a $25 covered call. And what that means is I'm willing to sell my shares, and that's 100 shares, at $25 by September 19th if it gets there, right? And then next, you can see the next one right here, I have that $20 put. And this is the one that I will be looking to roll, right? It did go down today. I did put an order in, but it did not go through. I was being a little greedy and didn't get what I wanted. So the option order that I had open just canceled. And this is the existing one that I currently have. And that is for my MSTY at a $20 put. And that expires August the 15th. Now, as you can see, with MSTY currently at $19.19, that means this is in the money. And at any point, technically, I could get assigned those shares at that $20. But normally, you don't get assigned early. You could, but it doesn't happen too often. At least it hasn't for me. I've been assigned early a few times, but not more than probably a handful of times, right? So this one here, chances are it will go all the way to expiration. And why? Well, because the buyers are greedy, right? They want every little penny they can get out of it, so they don't necessarily want to assign it early. They'll push it all the way up to expiration, but again, that is not guaranteed. It could get assigned early. But this is the one that I'll be looking to roll, right? And if you watched my previous video, you know that I was looking to roll this one out to September, and that's the third Friday in September, and down in price from $20 down to $19, okay? So we can look to roll this one, and I'll step it through for you just so you can see. And again, this is for the Webull chart platform. Now normally I do mine on my phone, and I use the app on my phone to do all my trades. I do not normally use the desktop version, and that's what we're looking at right now. So I'm not 100% familiar with every little thing on the desktop version, as the phone version for me is much simpler and quicker and easier and more accessible for myself. But we can walk it through if you do use the desktop version right here. So you can do it one of two ways if you're going to roll an existing put. And next I'll show how to actually open a new put, right? But if you're going to roll this existing put, I can simply click on it And right here it says create a rolling order. I can do it from here, or I can go into the options and I click that. It takes me to my options chain here. And you will see August the 15th, that is the expiration date, right? And you will see right here, I have an existing position that is open. Now that position there is that $20 put. And this is the put side, right? So over here stating that I have this $20 put. And currently it is worth about 82 cents. Now each contract is 100 shares, so currently this is worth about $82. So if I wanted to just flat out close this one, just buy to close it, I would have to pay around $82 to close this trade, right? But I can roll it and hopefully get a credit by doing so. I still have to pay to close this one, but I can open a new one to earn money. And if I earn more than the 82 cents here, then that would be a credit, right? So to do that, we can just simply go right up here and we'll change our expiration date. There shows that I have that position right there, and that is that $20 put that I just showed you. Now we want to go for the third Friday of the month. So we'll just skip through the Augusts and go straight to September, and we'll count 1, 2, 3. And this is September the 19th. Now notice there is one that says position. So I already have something here, and let's just quickly look to see what that is. And then we'll also look to see about rolling that previous one. So I open this one up, and you can see there is the one. There's the position I currently have open. And this is the call side. And if you remember on some of my other videos, I have that call to sell 100 shares at $25, right? So that just shows you right there that I do have that call to sell the 25 strike for those 100 shares. And that will expire September 19th. Now that one is safe as long as the price of MSTY does not get up to the 25 or above, right? If it does by the expiration date, then my shares would get called away and I would be selling my shares at that $25. My current average is below the 25, so that would still provide me a little profit. So that's why I don't mind if it would happen to get assigned and taken away, because that would still be a profit for me. I don't ever like to sell a call that would be below my current average cost of a stock, right? Just in case you do get called away, you don't want to take the loss, right? Anyway, we are looking at that put, and if we're looking to roll that put, the previous being August the 15th, this one being September the 19th, right? And we were looking to roll it down to $19. Well, it looks like $19, it's paying about $1.15, right? That's the midpoint. Now, the before was around 80 some cents, right? And this one's about $1.15. So you can look at possibly getting somewhere around about 35 cents to do that roll, because the difference of the 115 to say 80 cents is about 35 cents, right? So let's just go ahead and we'll just go ahead and click it, and we will show how to actually roll that existing one. So we will go back right here to this $20 put. So if I just right click on that $20 put, and this is the one that I currently have open, I can actually create a rolling order right here as well. So either from the chart or from the options chain, I can create that rolling order. So after you click that, you will get this little order form right here. And this shows basically what I have and then what I want to actually roll it to, right? This is the one that I will adjust, as this is the leg that I would be rolling it to. Okay? And I've got it zoomed in here on this window so that you can see it on the screen. The current position that I have here is the MSTY. There's the $20 strike for August the 15th. It's a put, right? Now, it's showing buy here. Why is it showing buy? Well, because I first sold it, right? I sold the put to open, right? Now, I have to buy that put back. Remember that 80 some cents before where I said I would have to pay to close it? Well, that's what it's doing right here. It's buying that contract back, right? Because I've got to close it. I opened it by selling it, so I have to close it by buying it, right? You have to close it out. Even in the roll, you still are closing that trade out, but opening a new one. The only difference is you're doing it all in one shot. Now you can do it separately. You can physically go in and you can just close out that one existing $20 put by buying it back and then going to whatever expiration date at whatever strike you want and then sell a new put at that time and just do it in 2 trades. There's nothing wrong in doing that, but this here just makes it a little simpler, and plus you don't have that money kind of going out and coming back in, right? This just gives you whatever that difference is. Or if it is a debit, it will take whatever that difference is. So currently you can see right now I have that $20 put for that August 15th. Now I wanted to actually roll this one out to the 3rd Friday of September. So let's just go ahead and we'll just select this and we'll scroll this right on down. And since I've got it zoomed in, it kind of goes off the screen, but you kind of see this is the 1st Friday and then there's the 2nd Friday, and I'll go ahead and select the 3rd Friday and you'll see now it says September the 19th, which is the 3rd Friday. Now I wanted to roll this down. I could keep it at the $20 strike if I wanted, but I don't necessarily want to do that. I am looking to try to roll it down, and if MSTY is at 19-ish by that next month, I'll roll it down to 18, right? And I'll just keep rolling it down until eventually it'll just expire worthless. At least that's my hope, right? So let's just go in here and we'll select this and we will select the 19 because I want to select the $19 strike. Now I'll select the 19 for September the 19th, and that's selling a put. And then I'm buying my put back here, that $20 one for August the 15th. And it shows 10 cents. Now that 10 cents currently, that is the bid price. Now if I click this little pencil here, I can click it and I can either manually enter in a limit price that I would like to earn. I can also pick the last one. I can pick the mid price, the ask, or the bid. Well, if we go for the mid price, I usually always try to select the mid price and then adjust it as needed. If I feel like it's going to continue moving up, then maybe I will see what the mid price is and then I will bump it up a little bit, right? I can do whatever I want and say I want the mid price. So I can go in here and I select mid price and it says 32 cents. So basically I would earn $32 for making this trade right here. And that is it, right? This will close out my existing contract that I currently have open. It will then open a new contract for this date, for this strike price, for this ticker, right? It has to be the same ticker, but the expiration date and the strike can be different, right? But since I am selling it, I am looking to earn money, right? So this will pay me $32, which is 32 cents times 100 shares times how many contracts? I only have one contract. Now this says share, but keep in mind on options, each contract is worth 100 shares. So when it says share, it's actually contracts, right? Because you are dealing in options here. So don't get mixed up on that one. This is how many contracts you want to actually roll. I only have one to roll, so that's all I'll be able to roll in this case. Then I just simply would click the place order, which is this blue button, and I just have my window here a little tight, but that's okay. You get the idea. This is the part that I wanted to show you, right? This is the important part. So I think that basically shows you exactly how to roll without going into a whole lot of details of your order types, how long you want to set it for, because currently it's set for a day, right? So by the end of the day, if this does not go through, it would cancel, right? It'll just close it. I can change it to GTC, which is good till cancel. If I select that, then this at any point during market hours from now to say 30 days from now, this will go through if that is met, right? But normally whenever I am rolling or I'm doing a put or option itself, I usually like to keep it just for the day, and I'll reevaluate it the next day. Options do not execute or go through after hours or pre-market, okay? So it's only for market hours. And as you can see right here, this tells you that after the order is filled, the original position, which is my $20 August the 15th put, will be replaced with a new position for a $19 put for September the 19th. So right there tells you, and that's pretty well explained and self-explanatory of exactly what it's doing. So you know by this that you are doing what you wanted it to do, right? Okay, so now how about creating a new option? So we will close this out. All right, here we are back on the actual options chain, and we will go ahead and say that we want to sell a put on MSTY. Now, I am not suggesting that you sell a put on MSTY or a call or anything else on MSTY. You have to decide on what you want to do, and with the volatility of it and with the higher risk of MSTY, you want to make sure you understand what you're doing before you would sell any options or even buy options on these higher yield ETFs. But I am just using MSTY for the example. This would work for any stock, right? So let's just go ahead and say that we're going to open a new put, and we're going to sell that put with an expiration date of, again, that third Friday in September. So we will open that one, and we're going to sell a put. Now, we're going to look here, and since we're not rolling, we are looking to earn the money by selling the put, and we're looking to get some premium here. Now, the premium is the money that we would be earning for making that trade or selling that put. And it looks like if we look at a $17 put for MSTY on September 19th, we can earn about $40 for it right here. That being the mid, right? That is the midpoint. Between 30 and 50 is 40. So we could sell a $17 put for September 19th, and it would pay us $40. Now, if that price gets down to or below 17 by that date, then you could get assigned those shares at 17. And that means that even though the price of MSTY, if it's at $15, you still have to buy those shares at 17 on that date. That is part of the contract, and that's why you're getting paid the premium. So we'll look to actually sell a put at this 17, and we can do that right here, and we'll say sell the order. Right now you can click either one and you can change it in the order form, but we'll just go ahead and we will right click on this, and we want to sell it, right? We're selling that put. So after you hit that sell button, you'll see that now we have this little order entry right here. And we can see that it is stating that we are selling a put. But if yours says buy right here, then all you got to do is click it and it just switches it to sell. And that's just probably because you clicked the ask, or you right clicked and clicked on buy versus the sell. So it doesn't matter. You can flip it back and forth and select the right one. But currently we want to do sell. And we're selling a put for September the 19th for a $17 strike on MSTY. One contract, right? That's one contract at a limit order. And we want that mid price. And I believe that's the mid price, but let's just check. Yes, 40 cents is the mid price. So that would be 40 cents times 100 shares. That's $40. And since I only have one contract, it's only times the one, which is still the 40 bucks. So I could make $40 for selling this put for September the 19th at a $17 strike. Now, if you think that MSTY will not get down to $17 by September the 19th, then you can write this option right here and sell this put at that $17 strike and pick up 40 bucks on it. But do keep in mind that if MSTY does get down to 17 or below, you will have to purchase those shares at $17, no matter what the price of MSTY is. Now, if MSTY price is above the 17, then this contract will expire worthless and you do not have to buy those shares at that $17 price. Then just to execute it, there's a little blue button right down here off the screen. You just can't see it, but you would click the place order. And when you click that, it will send the order out and you will wait to see if it gets executed or not. Now, going for that mid price, sometimes it goes through, sometimes it doesn't, right? It just depends on how it's doing and can it get to that $40. If somebody's willing to buy that option for $40, then that will get you your $40 for selling it, right? So that is basically all it is to actually doing an option. And that is just the working mechanics of it, not necessarily what an option is and how it works and all this, right? This is just the mechanics of using option selling on the Webull chart. So let's just go ahead and we will quickly take a look and see where MSTY, MSTR, and Bitcoin went today. Okay, so here we are on MSTY, and I'm just keeping it on the adjusted chart for now. As you can see, MSTY did have that red day today. We did have a little bit of a pullback in the price. It did drop 20 cents. So it's down 1.03%. But again, look at this. This is still quite interesting, isn't it? We had a pullback in price, but yet the momentum is still decreasing. We're still decreasing on that momentum off of the negative side, and it is almost about to cross over, right? It is closer than it was yesterday. Now, it is somewhat going parallel with each other, which is not a great sign, but it is still decreasing, which means it is getting closer. I'd like to see this go ahead and cross, and let's start getting some green momentum bars, but that is not up to me. But like I said, that momentum here on that red side is decreasing, even though we had a pullback. So that's a head scratcher right there, something to think about. I'll let you mull that over a little bit in your head. So let's just take a quick look at MSTR and let's see where it sets. All right, it too did have that red day, but just like in MSTY, we have that momentum bars decreasing on the red side, which means it's getting closer to getting to that green side. And if we can get some green bars down here, then we're going to start seeing this thing going on up. like I said, it's very interesting that we have this red pullback, but yet the momentum moved positively. So very interesting, right? Very interesting. Almost makes you think that maybe that red pullback isn't quite real, right? I don't know. We'll see. Do we start seeing a nice little move up, or does the momentum here start increasing back on that red side? Because if it doesn't increase on that red side, this here is going to start moving up. And to me, that's what I'm seeing with the momentum and with that MACD. I'm really thinking that we're going to start seeing some movement up on MSTR, but that's just my opinion. And yes, you can see that I do have a stop limit order on my MSTR shares. I currently have about 22 shares it's showing, and I've got that stop limit at about 389.05. Okay, so if it did drop down to that 389.05, around that area, it will kick me out. Now it's a stop limit, so I've got a range on that, right? So I've got my limit and then I've got my stop order, right? And that's the reason it's a stop limit. So once it hits one, it triggers it, it goes to market, and then once it goes to market, if it didn't move too fast and shoot past my stop order, then it will execute and kick me out. But if it did drop or opens below my stop limit order, then it will not go through. Now I keep my stop limits pretty tight, and we'll see how that fares for me, as I used to only put a stop order on it, right? But the problem was, on a lot of these, after hours, you would have some kind of downturn and it would drop, right? It would drop like, say, $5. And then when it opens the next day, it's down $5 and it automatically kicks you out. Well, that $5 drop might be less than what your average cost is, right? So then you end up taking a loss. So by putting a stop limit, that is just saying at this price, trigger it, send it to market, but I am not willing to sell it under this other price, right? So in this case, say I've got the 389.10 to 389.05. So I might have a 5-cent stop limit range. So once it hits 389.10, that means it will send it to the market, right? If it's, open in market time, right? Because these only work during the market hours. So if it's dropping and it hits 389.10, it goes to market. But I've got this order here that says I'm only willing to sell it, and I will not sell it any less than 389.05. So that means that if it shoots right past it, then that order will not execute and it will just stay. Now, granted, I could be riding it all the way down and still own it, right? But if I am long that stock, I don't want it to necessarily open $5 under and then sell it at a $5 loss, right? Especially if I'm putting tight stops on these. And you can see that my current average here being 382.67, that's my average on the 22 shares, and I have this 389.05 stop on it, right? And I move it up as I feel, right? And I usually try to follow that MA5 right there. But when I start seeing a pullback, I just basically let it sit, and we'll see, can it stay above it, or is it going to come down and trigger me out? But with MSTR, that momentum is decreasing, and I see MSTR moving on up. But let's take a look at Bitcoin, and here we are with Bitcoin. Now, as you can see, we did have that red pullback yesterday, and today we did open, and hopefully we can close above this 117.7, because if we can, that means that 117.7 will now be our new support line. And that's an even better reason why we might can see MSTY moving on up. Now, the only thing that could probably not push MSTY up would be if Mr. or Strategy decided to buy more Bitcoin. That could bring the price down, and then of course that will affect MSTY, right? But currently it looks like if this just keeps on going and stays where it's at and does not go back down below 117.7, we're going to get that confirmation candle that we've been waiting on for Bitcoin to make this 117.7 our new support line. And then this 120.3 will be our resistance line. We did touch it and are pretty close to it right now. We'll see, can we break on through that? But first things first, let's make sure and try to get this 117.7 as our new support line. The momentum bars here are increasing, and that's why I believe we're going to see Mr. and MSTY moving up as well, unless Mr. buys more Bitcoin or something like that. If it all stays as is, I see Mr. and MSTY moving on up, just simply because Bitcoin is moving up as well. Now, if we can continue to move on up, we can start getting a little volatility, hopefully to start building, which will help Mr. push MSTY right on up with it. Some great stuff happening, guys. Great stuff. Love it, and I'm excited. So I know I covered a lot today, and hopefully it was helpful. I wanted to go through to show how to sell an option, and I also still wanted to do an update on MSTY, Mr. and Bitcoin. So hopefully you got a little bit out of it and that the video didn't turn out to be too long. So I think I'm going to wrap it up right there. If you don't mind, hit that subscribe button, smash the like button. It would be much appreciated. And as always, I am not a financial advisor. This is not financial advice. Please do your own due diligence before you get into any stock plays. And until next time, Legend out.